Please confirm. Okay, so shall we proceed? We'll be starting with the MCQs today. So let's quickly move on and start with the questions. Okay, that's the first question. Before we proceed further, there are 4 modules, right? So there's module A, B, C, and D. Among all these modules, we have 3 kinds of questions: 2, 1, and half marker, right? So more questions of related to 1 and half are coming from the area of module B as well as C. So we'll be starting with module B here, right? We are starting with the module B, and then we'll move towards C and D as well as A. So that is gonna be the area, the sequence through which we'll be covering our topics. And whenever we are talking about these things, what I can suggest you is, if you are going through the class and you are looking forward to the MCQs, don't just go through the MCQs. If there is anything new that you are learning, then kindly note down that point, that this point is new to me, so I'll just carry a particular pen and a particular notebook and just note down that pointer. You don't have to note down the entire MCQ. What you can do is just note down the pointer of whatever new that you learned out of that question. In this case, you'll not only practice, but you'll also prepare the study material for the day of your examination, right? So I hope this thing works for you. So let's start with the class. Okay, the first question says, among the following, which accounting concept satisfies the valuation criteria? When we talk about the valuation criteria, that means in accounting we have to keep on valuing things. Now we need to know whatever we are selling, what is going to be its value. So which particular method will satisfy the valuation criteria? In terms of valuation, is it going concern, realization, and cost? Is it going concern, cost, and dual aspect? Cost, dual aspect, and conservatism, and realization, conservatism, and going concern. This question is from the area of concepts of accounting. When we talk about this particular question, it says number 1, valuation is required only when when we purchase an asset or at the time of selling an asset. During that period, we do not try to value it again. So first of all, number 1 is going concern. That is correct. In terms of realization, whenever we sell it, whenever we purchase it, we'll record only at that point of time. Realization is obsessed with cash, so it's always going to talk about cash. So that is going to be that. And whenever we purchase an asset, we are worried about the cost of it. So basically, whatever cost we purchase, that cost will be recorded in our books of accounts, and we will diminish the value based upon depreciation over the life of the asset. That means going concern will be there, and the day we sell it, then we'll record it. That means realization. So when we talk about the valuation criteria, not only in terms of the assets, but also from the point of view of the revenue, if we look forward to the realization area. So that means the correct answer will be A. Okay, so everybody who's there in the class, kindly give answers as well while going through the question, because this will help you to understand what are you exactly dealing with in terms of the questions. So I would request everyone, whenever you are dealing with a particular question, kindly respond with an answer so that even I can come to know which particular area is basically weaker and which particular area requires more practice. Right? Okay. Now the second question. The second question is, among the following, which of these errors affect 2 or more accounts? It is affecting not only one account but 2 or more accounts. So is it error of complete omission, error of principal, errors of posting to wrong account, or all of the above. Anything which affects two or more accounts. Error of complete omission is going to affect your debit as well as the credit side. So technically, it affects two sides. When we talk about the error of principal, an asset when noted as an expense or an expense noted as an asset, two accounts. Error of posting to a wrong account. That means the correct account is not recorded, wrong account is recorded, and along with that, one more account which is tagged along because of the journal entries will also go wrong. So technically, this also affects two or more accounts. So then all these three errors will affect two or more accounts. It is going to be two or more. So technically, all these three errors are affecting two accounts. Question number 3. Which of the following error is an error of principle? Among the following, which would be an error of principle? Error of principle means assets can be taken out as an expense and expense can be taken out as an asset. So, which of the following error is an error of principle? Okay, when we say 5,000 received from Ram account credited to Ram account. So technically it's not wrong at all. This one is correct. In the second one, it says 5,000 incurred in plantation in an installation of a new plant noted as a traveling expense. It's not a traveling expense, it's basically an asset. So technically this particular point, uh, basically it is basically a part of the point there. This is fulfilling or fulfilling or completing the error which is considered as an error of principle. An asset which is which is noted down as an expense, or an expense which is noted down as an asset. Then, when we talk about it, rupees 500 paid for the wages debited to the salary account. Here, an expense, the error is only of an expense, one expense noted as another expense. So, this is not an error of principle. Then, 5,000 purchase of stock noted as purchase. Now, this particular thing noted on a different amount, this particular thing is called error of commission, or what we call the clerical errors, right? So these are the different errors. Among the error of principle, any error which qualifies where we have an asset turning into an expense for the question, for the error, or an expense turning into an asset. That is what we do here. So the correct answer is actually B. Moving on, in the three column cash book, or that is what we call the triple column cash book, which column does not exist? Cash column, bank column, petty cash column, or discount column? In the three column cash book, we have cash balance, we have the bank balance, and we also have the topic of discount column as well. We do not have the area of petty cash. Yes, ma'am, this is the English medium one, right? So the correct answer is the petty cash column. Okay, before we move forward, according to you, what is the nature of the petty cash? What is the nature of the petty cash? Is it real, personal, or nominal account? Petty cash is basically an asset having real account as its nature. It's not a nominal account, ma'am. Nominal account means any account which is an expense or an income. Any expense or an income would qualify for this. right? Now, the closing. Okay, there comes a question. The closing balance stated in the petty cash book. It is basically a gain or a liability or an asset or an expense. The closing balance. When we talk about the closing balance, whatever money is still left, that is what we have in terms of the petty cash, because this is the amount that we are left with after spending all those money, all that money in those petty things. For example, labor expenses, for example, some minor repair was happening, or refreshment expenses for the employees. So whatever is left, that is what we are left with by the end of the year, and we'll use this money in the next year. So it doesn't matter whether it's called cash or petty cash, cash still remains cash. So the correct answer is C. It's not a gain, it's actually an asset, because it's the amount which is left. Basically, the accountant gave to the petty cashier, say rupees 1000. He gave them 1000 rupees, right? So out of 1000, he spent 800 rupees. So he's still having 200 in his bank account, in that cashier area. So in the petty cashier is having 200 rupees. Now this is not what he saved. This is not a gain. This is basically the amount which is still left with him. Now he can get lesser amount in the next area, and in the next year he can ask for a lesser amount, because ultimately under the cash book they have an impressed system. Under impressed system, every month we need to have 1000 rupees. So if 200 is saved in the previous year, so what will we do? We'll just add 800 here, and now it becomes 1000 for the next year. So basically the amount is saved which can be used in the next year. So it's an asset, not a gain. Next question. Which of the following is a personal account? Outstanding rent, rent account, cash account, or bad debts account? Among the following, the which of the following is a personal account? The personal account among the following is basically outstanding rent. Rent is basically a nominal account. Cash is basically a real account. Bad debt is again a nominal account. As expense and losses are specified under nominal account, and under real we give all the assets. Cash account is a real account, ma'am. Outstanding rent means the rent we're going to pay to a particular person. Na? We're going to give this money to a particular person. So that means it is a personal account, and the account which is the personal account here is representative personal account. Now let's move on. Another important, this is a question from the accounting cycle, that is, posting is the process of entering in the ledger the information contained in the trial balance, entering in the ledger the information contained in the subsidiary books, or entering in the ledger the information contained in the journal, or all of the three. Okay. When we talk about the posting, is the process of, once we have the journal, from journal whatever transactions we have, we put it in the ledger. So it is the process of posting through which we put the things in the ledger, right? So the correct answer is actually C. We're done with this question. Now the next question. If a customer files a legal suit on the business, it is considered in the books as. Will it be called a legal expense, a liability, or a contingent asset, or a contingent liability? If a customer is filing a suit against the business, basically when we talk about Coke or Pepsi, they face these kind of losses a lot. They face this kind of the cases a lot, not the losses, but the cases. There are many cases which are pending, but the point is till the time they are not proved, they cannot be materialized and called a particular liability yet. So basically, this is not a certain liability. Till the time it's not a certain liability, it's treated as a contingent liability, a liability which is not certain. We call it contingent liability. Correct. Now, the next point. The dash represents a potential obligation that could be created depending on the outcome of an asset. It's a potential obligation. We are not yet deciding to pay that amount, but we might have to pay it in the future. So, is it basically an internal liability, a current liability, a contingent liability, or a non current liability? Since it is a potential obligation, it is not an obligation yet. It can become one in the upcoming future. So it is basically, again, the same answer. It is the contingent liability. There are different kind of questions which can come up from one particular topic only. No? So if we talk about, it's just the change of the language. Okay. Next question. If we purchase of a plant or for a factory use wrongly debited to the purchase account, it is an error of omission, commission, principal, or misposting. Basically, okay, so there was a uncertain amount. Now, there was a potential obligation. Potential means we are not sure we might have to pay. So that is the point, because it is so uncertain. We don't even know whether we'll have to pay, or we are not certain about it. Then there is a chance that there it can turn into a liability, or it may just remain the same case. So what are we gonna do is we'll treat it as a disclosure, nothing else. No, this is not a principal error there. Actually, in this particular question, yes. Purchase of a plant for factory use wrongly debited to the purchase account. See, we got an asset, we treat it as an expense. Again, the same concept that we just did in the beginning. If an asset is taken as an expense, it would be called an error of principle. That's correct, sir. The answer is error of principle. Next question. Which of the following term is the most suitable for writing off the plant? If I'm writing off a plant, it would be taken as depletion, amortization, depreciation, or all of the above. We're writing off a patent. Patent is basically an intangible asset. For an intangible asset, what term is used? For an intangible asset, we use the term depreciation, amortization. And when we talk about tangible assets, if it would have been a plant, then it would have been depreciation. And what if it would have been a mine or a quarry? For any mine or a quarry, that means these are basically natural resources. If their value declines, then we use depletion. So these are three different terms: depletion, amortization, and depreciation. Depreciation is for the tangibles. For intangibles, we have amortization, and for the natural resources, we have depletion. The correct answer here is amortization. Among the following, which is true about AS7? Among the following, which is true, no exemption has been provided under in AS7 with regard to this applicability provided in AS3. Bank borrowings are generally considered to be financing activities. Okay, this is in AS7 actually, and this is related to accounting standard 3, that is cash flow statement. This question is a little higher, I would say. Cash flow statement is covered under AS3 of the accounting standards, and when we talk about accounting, Indian accounting standards, it has been taken as in AS7. Okay, the question is a little higher, so I'll just explain the entire portion what it says. Among this question, which is true, no exemption has been provided under Ind AS with respect to the applicability as provided in AS3. AS3 was not applicable to all the companies. SEBI had agreed only selected companies are supposed to prepare cash flow statement. The bank borrowings are generally considered as financing activities. If we take a loan, which is a part of the financing activity, then cash flows of foreign subsidiaries shall be translated at the exchange rate between the functional currency and the foreign currency. See, whatever amount we receive in whatever currency, we have to note it down in the reporting currency. For us, what would be the reporting currency? Is it going to be a rupee, or is it going to be the foreign currency that we are dealing with? It's going to be the rupee, because every time we have to report in rupee. So I would say this particular question is a little above. So it's more important that you learn the concept there. Under cash flow statement, we prepare it, and yes, the first second point is correct. First point is also correct. The Ind AS 7 is applicable to all these organizations, while AS3 was selectively applicable. Bank borrowings are considered as a part of financing activities, because this is based upon the giving of basically taking of loans and raising funds. Through that, cash flows of the foreign currency subsidiary shall be translated. You'll have to take whatever the currency is there, we'll have to convert it into our domestic currency in order to understand its value. So technically, third point is also correct. So the correct answer is all of the above. Next question. According to the accrual concept, transactions and events are recorded in the books at the time of their settlement in cash. Transactions and events are recorded in the books at the time when they are entered into. And the transactions and events are recorded either at the time of settlement or when they are entered into, or none of the above. Gayatri ma'am, the previous question was related to the cash flow statement. So when we talk about the cash flow statement, it was among the accounting standards that we did. Accounting standard 3. That was the point. Under accounting standard 3, if you take a loan from someone, it's basically your borrowing. It's a financing activity. Among the CFS, we did 3 points. There are three kind of activities: operating, when you are running your business, then we have investing, when we put money somewhere, and then financing. It's related to the raising of loans. So it was related to all this concept, right? Once you took a loan, it was basically part of borrowing. It's a financing activity, and AS3 is limited to only a particular company. Not every company is supposed to prepare CFS, that means cash flow statement. And the third point was, whenever you have a foreign subsidiary, right? If we have a foreign subsidiary, whatever amount that subsidiary earns, we have to convert it into our domestic currency in any case. Without that, we cannot work. So the correct answer is this. Okay, the next question. The amortization of, okay, we were dealing with this question now on accrual concept. We just went ahead. Under accrual concept, whatever amount we earn, that's because the amount is due first. Whenever it's due, we record according to that due basis. So according to accrual concept, it has to be noted the day we enter into that transaction. So the point is B. Next point, amortization of the intangible assets such as goodwill, which have indefinite life, is an example of an accounting concept. Which accounting concept is it? conservatism concept, or continuity concept, or realization concept, or measurement concept. Amortization of intangible assets. Amortization means reduction in the value of the assets. See, there are two, 3 points which are to be considered. Amortization means we are not noting it down at its original value, which is there in the books of accounts, right? We're not noting it down at that particular amount because the value declines over the period of time. So we are following that, but we are agreeing on that because underlying assumption is that this business is going to stay. This business is here to stay. So technically, continuity makes sense, but the term amortization has won the case. We are reducing the value of the asset because we understand the value declines over the period of time. So it is conservatism. Anticipate all the losses, but not profits. So the term conservatism talks about anticipate the losses but not profits, right? Next point, which of the following is an event? Among the following, which is an event? There's a thin line between a transaction and an event. In case of a transaction, we just record this happened, that happened. In terms of an event, we record the result of it. If we talk about an event, it would be noted as sale of goods for rupees 5,000, closing stock worth rupees 4, purchase of goods 8, rent paid 2. All these A, C, and D, these qualify as an expense. They are an expense for the company. Na? We're going to pay that. So if you're going to pay, we're going to keep it separate. So the value would be the closing stock because by the end of the year, after the sale of the goods, we'll be noting it down. That is closing stock. That means any of that closing stock that we have, it's a result. It's not a transaction. It's because of the result that happened. So basically, it's an event. Basically, when we talk about an event, it can be internal or external. This is an internal event because we are just able to sell that particular thing, and after that, whatever is left will qualify as an asset. Yes, that's the difference. Transaction is basically just happening of something. This happened, that happened, that happened. While when we talk about the events are basically the results of the same. Next point, dash are those fixed assets that have fixed content. Like coal in the coal mine, the value of the asset goes down as the content are taken out. Intangible, fictitious, wasting, or tangible. Previous question answer? Okay. That was B, the closing stock. Closing stock worth rupees 4,000. When we talk about the fixed assets that have fixed content, that means, for example, in mines and quarries, whatever resources are there, once we take it out, the value falls, right? The value falls over the period of time. The correct answer here would be wasting asset. The value of that particular asset will deplete over the period of time as we take out the resource of it. Okay, the next point, which of the following are the fundamental accounting assumptions? Going concern, is it matching, then consistency or dual aspect, or materiality and accrual. Select the correct answer from the options given below: A, C and E, B, D and F, A, C and F, okay, it won't be 5, it would be 4. So it would be A, D and F. The correct answer for this particular question is, for the fundamental accounting assumptions, we have G, C, and A: going concern, consistency, and accrual concept. So the correct answer would be A, C, and uh, okay, accrual is there now. So it is A, C, and F. The correct answer is C: accrual concept, going concern, and the consistency. So I learned all these assumptions by creating an acronym called GCA: going concern, consistency, and accrual concept. Okay, the next question. If the rights and beneficial interest in a property are transferred, but the documentation and the legal formalities are pending, then the seller and the purchaser should record in their accounts as a sale or purchase. This is an example of. Okay, somehow this would be 4 points only, not 5. Go ahead. When we talk about this point, see, we haven't taken that, no doubt the documentation isn't complete, but that doesn't mean there is no relevance to the entire thing. See, the legal formalities are still pending, but we have got that particular thing on our own now. That thing is still ours. So when we talk about this scenario, the answer would be substance over form. We'll have to go with the actual transaction, not what is there in terms of the bookish area. That means whatever is there in the paper form. Next point. In dash approach, assets which are to be used for a long term in the business and are not meant to be sold are presented first, and assets that are most liquid, such as cash in hand, are presented at the bottom. Then what is this particular thing called? Alphabetical order, permanence order, then case liquidity order, or marshalling of assets or liabilities. When we talk about this, if the in this approach, assets which are to be used for long term in the business, they are going to be used for a long term in the business. That means they have to be written first. The entire arrangement is called marshalling of assets, but we are writing the fixed assets first and the liquid assets later on. So the correct answer would be permanence. Next point, the contra entries are passed only when double column cash book with bank and discount is prepared, three column cash book is prepared, simple column cash book is prepared, or none of the above. When we talk about the contra entries are those entries which are done in cash book only when we create cash and bank column simultaneously. That means it can be a two column cash book having cash and bank, or a three column cash book having cash, bank, and discount. So basically, the correct answer here would be B. 3-column cash book that is to be prepared. Cash, bank, and with the discount column. Okay, another question from the area of rectification of errors. If a purchase return of rupees 94 has been wrongly posted to the debit of the sales return account but had been correctly entered in the supplier's account, the total of the trial balance would show the credit side 94, the debit side 94, or the credit side 188 or the debit side 188. Okay, if the question says if the purchase return is of 94, PR means we are returning the goods now, right? So purchasing return is basically our credit side item. Technically, it is our credit side item. Purchase return, we are returning it back, so it's a credit side item which should be noted down, but what has happened is we have noted it on the debit side, something which was supposed to be shown on the credit side has been shown on the debit side. So technically the error is of 94 plus 94. How is it there? If a purchase return of 94 has been wrongly written as sales return, that means it has become a sales return shown on the debit side while it is a purchase return of 94. Technically, this 94 which is debited has to be credited and this 94 has to be created. So both of these things has to be created. Technically, the debit side is more currently, right? So what is happening is the debit side is more by rupees 188. How is this 188? 94 plus 94. As in this question, what is happening is the credit side was supposed to have, as per the trial balance, the credit side was supposed to have purchase return of 94. Now this 94 is technically not there while we have a sales return of 94 created. So what has happened is an extra 94 plus a 94 missing. That makes the total of 188. So this would be the total, right? This is from the rectification of errors. Okay, the next is a journal. A journal entry for outstanding salary to accountant is rupees 6,000 will be debit salary and credit cash, debit outstanding salary and credit salary, debit salary and credit outstanding salary, or cash account to salary account. The value for outstanding salary would be for the outstanding salary, the answer would be salary account debited to outstanding salary, right? Salary as an expense would be noted, and outstanding salary means a salary which is still yet to be paid. It's not paid yet. So it's a liability that we are creating. So the journal entry would be salary to outstanding salary. That answer would be C, right? Okay, next question. The depreciable amount plus the residual value of a fixed assets is equal to depreciation, accumulated depreciation, cost of fixed assets, or future economic benefits of the asset. This is basically a concept-based scenario even, and you can also relate to the module A for this as well. See, if I say this asset can be depreciated for max 1 lakh, by selling it, I'll get 20,000. So technically, its actual value is 1,20,000. This is the value of depreciation which would be charged over the life of the asset, and this is the residual value. So in this case, it would be the cost what we are paying for that asset, not the depreciation. Depreciation is depreciable amount. Whatever depreciation would be there over the life of that asset, right? So in this case, the correct answer would be the cost of that fixed asset. Among the following, which of the following limitation of accounts states that the accounts may be manipulated to conceal vital information? Audio is not clear. Please confirm. It's a disturbance. Anybody else having a disturbance? Okay, Gayatri ma'am, if there's a disturbance, kindly relog in. Okay. Now, when we talk about the limitations of the accounting, it is basically whatever is basically stating that we can conceal the information. It is basically not totally free from the biases. Na? Accounts has also got its own limitations which are there. Accounting leads to window dressing. Accounting is not fully exact. Accounting ignores price level changes and it ignores the qualitative concepts. Technically, when we talk about it is manipulating the and concealing information. Whatever is there, we're not showing it. The correct answer here would be window dressing. We just decorate the window. So whosoever looks at the window, they would feel that, oh, this place is very beautiful. But behind where the window ends, the dirt is there. So technically, the books are showcased that way that the books are really good. We should look forward to it, while they're not worth looking forward to. So it is A. The accounting leads to window dressing. Ashish sir, you have raised your hand. Kindly message whatever the doubt could be. Okay, the next point. It is a system of paying advance in the beginning and reimbursing the amount spent on the from time to time to the petty cashier. No problem, sir. Is it impress system, financial system, analytical system, or the ordinary system? See, this particular system says whatever money we lose, we'll add more, right? Whatever amount has been spent, it's fine. We'll add the same amount ultimately. Under the system, what happens is we've just discussed it. If they just decided that every month I get 1,000 rupees to spend, so if I spent 850 rupees this month, and by the end of the month I'm still left with 150. Now in the beginning of the next month we'll make a total of again 1,000 rupees. Under this, a specific amount is kept every month. In the beginning of that month, it is advanced, and whatever amount has been spent by the petty cashier during that month, we'll reimburse it. So, this method is actually called impressed system. Analytical system is another system where we jot down and classify things in a different account. Every expense is noted separately. Then we have financial system as well as ordinary system. There's a different kinds of systems. As such, impress system is a system which is just like our pocket monies. So if you specify that this much amount is left, only the remaining amount will be reimbursed. Next question. A Limited is engaged in the business of retailing of two-wheelers, invested 30 lakhs in the shares of manufacturing company. So basically it is making two-wheelers. It is a retailer. Now it has invested money into a particular company in the shares. So basically the dividend he is receiving on this investment, what would you call this amount? Will it be cash flow from operating, cash flow from investing, or financing, or cash equivalent? What would you call it? When we talk about this method, it says, see, we have invested. This was not my business. I just invested this money somewhere. So if we are investing money somewhere and we are getting a dividend out of it, this dividend will be termed as a investing activity. As an investing activity, because we invested money somewhere, we received interest on it, or we received dividend on anything. So on shares we receive dividend. That's why the dividend is a better term to use. If we invest somewhere, we get interest, and if we talk about shares, it is what we get is the dividend. So we are getting the money because we invested somewhere. So the correct answer would be cash flow from investing activities. This is as per AS3. Okay, the next question. If the income of the business was 26,000, but there's a deficit debited to capital fund. So basically what is happening is the income was 26,000. By the end of the year, the closing capital was minus 4,300. So can you tell me what was the exact amount of expenditure that led to this negative capital? It's a trick question. Simple yet a trick question. Basically, what we do is income, whatever income we receive during the year. So what happens is that is income minus expenditure. Whatever profit we make, right? We add this profit in the capital. If we face a loss, we will take it as a loss. That will give us, this is the opening capital, and this what we're getting is the closing capital. Under this question they are telling us that income minus expenditure, we don't know about the expenditure that we're making, but we know that the capital is minus 4,300 and opening capital is not given, so we are not considering it. All we know is we have 26,000 rupees here minus the expenditure we have equal to minus 4,300. Since the closing capital is a negative term here, so what will we do? It would be 26,000 plus 4,300, 43,000, right? So the correct answer is going to be 30,300. Use the equation income minus expenditure, whatever we have, it's a loss, and that loss is technically capital plus loss is there now. So this led to that in area because there is no opening capital in this question. All we have is this area. That expenditure led to that extreme amount. So no, this is not exactly the accounting equation that I can tell you. What happened here is income minus expenditure that led to a major loss, and when that loss was added to the capital became negative. That the question clearly states, this is what you can get it, that the income is going to fall short. If the income is going to fall short and the expenditure is going to be massive, it has to be 30,300, right? Okay, oh, we are done with this question. The next question, everyone. Rupees 2,000 received from Smith, whose account was previously written off as bad debt, should be credited to bad debts recovered account, Smith's account, then cash account, or none of the above. there's a particular person who became bad debt. He was supposed to give us money, and now he has become bad debt. So he's not able to give us money at all. So technically, when he refused to pay, I had written bad debt to debtor. His entire amount was written off. Now he's giving me money. For what amount would be credited? We are receiving money. So shall we write bank account debit, whatever amount we have received, or cash account debit? It can be cash or bank to, that would be to the debtor or bad debts recovered. This debtor was long gone. He was written off from our books of accounts. While in this case, the bad debts recovered would be noted as the credit side option. Okay, the next point. An amount of 8765 paid to M. Technically, we were supposed to write M to cash, right? We have written was debited to N's account. So I've written it N to cash. The rectification of error will be increase the profit, decrease the profit, increase the assets, have no effect on the net profit. So that's a which question? This one. See, if the particular person says he cannot pay us, he is now an insolvent. You cannot go and ask him to pay to you. So technically, there won't be anything like that. What is exactly happening is when this person is supposed to pay you, he said, "I cannot pay you." The court has also discharged him. That means our debtor is gone. He was gone the day he was declared bad debt. Now he was credited, so his account was completely closed in our books. How can we open the account again? So we won't open his account, rather we'll note whatever amount he's supposed to give us as an income. Done? Yes, sir. You'll get the recording of each and every session that we are having. After a certain period of time, you'll get the recording. And what you can do is, after the completion of class, you can also review its PDF. You can download that PDF that would be visible in your app, and you can open up these MCQs and review them again. Okay. Now, when we talk about an amount of 8765, here the account looked like this. This was the correct entry and this was the wrong entry. If I look forward to the correct and the wrong entry, what's happening exactly? Under this, what's happening is this was the correct entry, this was the wrong entry. Where is the value? Where is that particular thing that would affect net profit? This is a personal account. This is also a personal account. There is no movement in terms of nominal accounts. All this is a real account. So personal accounts and nominal accounts are two different scenarios. Now, so there is no nominal account that is in use. So in this case, it has no effect on net profit. This question was again a trick question which has nothing to do with the personal accounts. It was all about there was nothing to do with the nominal accounts actually. The movement was only and only of personal accounts. Okay, next question. An error can be deleted at any of the following stages: before preparation of trial balance, after extracting the trial balance, but before the final accounts are drawn, after the final accounts, and that is in the next accounting period, or all of the above. Whenever you find an error, there is no deadline to correct it. Whenever there's an error, every error is to be corrected. So technically, whenever we find errors, those errors are to be corrected at any point of time. So it can be done, all of the above are true. It can be done before completion of the trial balance, after the completion of trial balance, before giving the financial statements, after the completion of financial statements. It's important to rectify it. You shouldn't keep a deadline that the other expense or that income can be done only in that particular manner. No, that's not the case, right? So if if there's an error, you can rectify it as and when the situation comes where you are able to trace it. Next question. Under this question, kindly identify the subsidiary books they're talking about. A trader entered into the following transaction. As a result, total purchase column in the purchase book will be, we're talking about the purchase book, the book that records only the credit purchases. A big hint, which particular item would be included. Goods purchased from Gaurav, goods purchased from Sudhir for cash, goods purchased from Kamal on credit, and machinery purchased from Dinesh on credit. This machinery is an asset, not a good, so technically not recorded. This particular thing is in cash, so it would be noted in the cash book. The two transactions which qualify is number 1 and number 3. It would be 25,000 plus 8,000. That makes a total of 33,000. Okay, right? It should be 3 points. So the correct answer is 33. When we talk about the purchase book, this book records credit purchases. No, sir, there was a credit purchase of another person as well. So technically, there are two. See, this was 8,000 as well, na? Goods purchased from Gaurav. We purchased goods from a particular person, and then here it is written on credit. Just because it is written on credit, only then we record. There's nothing like that. If we purchase something, if we purchase something and while purchasing we are also is not stating whether it is in cash or in credit, we assume it would be in credit. Okay, so let's move on. The last question for the day. If we are given two columns, column 1 and column 2, kindly match the following. What would be the correct answer? AS2, that would be construction contract. AS6, accounting for fixed assets. AS7, valuation of inventory. AS9, depreciation. AS10, revenue recognition. Okay, so let's match the following. Okay. So when we calculate it, AS2 is linked with valuation of inventory. So if I look forward to it, any particular match the among the following, whatever answer is having AS2 that is linked with valuation of inventory should be there. Technically, B is eliminated in the first case. Then we have AS6. AS6 is for depreciation. So that means if the say AS6 is D, then it can be either A or D. Now this is also eliminated. AS7 is related to the construction contracts. AS9 is related to the revenue recognition, and AS10 is related to accounting for fixed assets. Now, the accounting for fixed assets is also called the property, plant, and equipment, PPE. Rather than fixed assets, we call it PPE. AS6 is now removed and added into AS10. That is, depreciation is now a part of PPE. So technically, under this, the correct answer would be D. That correct, sir? Okay, I think I'm still left with a few questions. No, the questions are going to be lengthier now. So what we'll do is we'll discuss the remaining questions tomorrow, right? Okay. If you're looking forward towards preparing in the MCQ format, then what I can say is number one, with this class, what you can do is with every MCQ session, if you find anything useful, kindly note it down, right? Secondly, with every class, you can, after the class, you'll get a recording. Under this recording, what you can do is you can look forward to whatever we have done in the class in the recording, and with that you can also review the PDF of the same, so you'll be able to check out whatever the answers would be and practice it. The PDF is downloadable within our app, so you can open our app and at any point of time and review it. There is no restriction on how many times you can review it. So roughly, I think I would say 30 to 40 would be my average. I'd be closing with that amount. And when we talk about whatever we have done till now, if you haven't purchased our course yet, what you can do is you can use the code Y541 and you can avail the discount, and you can get a discount of up to 80%. Along with that, you will also get, along with that, with the code Y541, you'll be able to get up to 80% of discount. I think currently 77% discount is going on. So it's a perfect time if you're preparing for this examination and looking forward to MCQs. In this series, you'll be getting all the things, that is PYQs plus the MCQs plus the case studies. So all these things would be covered, and currently we are going to cover the area of module B only. So once we're done with the module B, we'll move towards the next modules, and by the end we'll be talking about the case studies. So we'll still continue with module B.